A 10x stock? What the heck's going on? Jake never recommends 10x stocks. You're right, guys. I don't talk about or promote IPOs, SPACs, meme stocks, or hype stocks. However, I am interested in smaller cap stocks, and smaller cap stocks do have crazy potential sometimes to 10x in size. If you didn't notice, on Thursday on the community tab of my YouTube channel, I posted about a company, ticker symbol ASPS. I also mentioned this on Thursday on my Twitter account and my Instagram page. If you don't follow me there for the most up-to-date stuff, because this company took off on Thursday. I had put a tracker share on this company over a year ago, waiting for this news event to occur, because I knew at that time I was going to go big on this stock. And we'll talk about the news, we'll talk about the company, but first let's talk about the technicals. I preach to you guys, you need to reference the technicals. Don't buy stocks that are in a downtrend. Well, the downtrend for this company doesn't get any stronger. However, news can turn a company on a dime, which we'll talk about. And this company, we'll just zoom out to the 2-year, was valued around $20 prior to when COVID hit. Fell off a cliff like everything did. It went down almost 75%, and it then kind of rebounded and stabilized in this $10 to $12 to $14 range. However, since 2021 started, it's been stuck in a downtrend and got as low as $6. But once again, on news, it hit a major uptrend. So this right here, Thursday morning is when news broke. I'll explain what it is in a second. And look at this stock price takeoff. It was at $6.40. It's now over $9. So it's gone up 30%. In my Schwab account, I purchased 600 shares, not a very expensive stock, at a value of cost basis of $4,500. I have about $50,000 in my account, so I took a roughly 10% position. I think percent of accounts, 10.03%. So I think that's a good amount of money. But in 2 days, I'm already up over 17%. Real quick, somebody asked me about, is it worth buying options on this company? And actually, it's not. The reason why is because it's such a small company that if you purchase a call contract and it ends up deep in the money, you're never going to be able to find a buyer later in the future. So what you would have to do in that scenario is hold it until expiration and then exercise it, actually purchase the stock for the value of the contract. So instead of buying 6 call contracts, I just purchased the 600 shares because I would have to do that anyways if I held them until expiration to then sell them and take a profit. So buying options on small cap stocks, unless you're ready to buy the stock outright, doesn't make sense. I would rather just buy the stock now, let it appreciate, and not pay a premium to the seller to just own the stock. I first learned about this stock and this company over a year ago by a YouTube channel called Investing Club. I believe his name is Elis, if you guys want to go check out his channel. The last video he made, he hasn't posted in the last month, but it was on ASPS. And what is ASPS? The company's name is Altisource Portfolio Solutions, and what do you think it does? The description on their website: build your results on our foundation. We are a trusted source for innovative solutions for the mortgage and real estate marketplaces. That's a very fancy way of saying that they handle mortgage foreclosures. What is something that has not been occurring the last year and a half that's been stopping this company from making money? Because there was a moratorium on foreclosures and evictions, this company wasn't allowed to earn a profit. It wasn't allowed to do its normal business functions. So what happened was, in the last day, 2 days, is President Biden announced an end to the moratorium on foreclosures. And he signed, I think, an executive order extending it only 1 more month through July 31st. And he said that this is it. We're not going to extend it. Now, I have to put a quick disclaimer in here that we don't know what the future will hold. If some variant of the strain occurs, we go back into some kind of a lockdown, the moratorium might be extended. But because I think the sentiment of everyone, we need to get back to operations as normal, I do believe that the moratorium will end on July 31st. Foreclosures will continue, will resume, and mortgage companies go to this company, Altisource, to handle the administrative and legal process for foreclosing on people. Now, of course, I'm a person with a heart, and I don't want to see any person or family have their home foreclosed on, but it is part of the natural market forces. One of the reasons why real estate prices have shot up so huge the last year is because people were not being foreclosed on. There was a lack of inventory from sellers. And as somebody who wants to purchase a home in the next couple months, I'm looking at housing prices and they're absurd. They're crazy how far they've gone up. Now, the home builders are trying to build as much as they can, but in reality, we need foreclosures to resume so that inventory can increase. Now, the good news for anybody who's behind on their mortgage payments is that real estate prices have gone up so much that they shouldn't be underwater. They should be able to sell their home for a profit and get out from the obligation. But for whatever reason, if they can't sell it for a profit, they're going to be foreclosed on and have the bank or the mortgage company is going to retake the home and then put it on the market to sell it. So when we look at the 5-year performance for Altisource, it is in a clear downtrend, and the reason for this is because the housing market and the economy in general was doing very well. And when the economy or the housing market does good, this company doesn't because their services aren't needed by mortgage companies. However, if we click on Max and we zoom out, look how high this stock got in 2013. So as the housing crisis in 2008-2009 skyrocketed and millions of Americans were being foreclosed on, this company, their services were in demand and their revenue shot up huge. So the stock price got up to $170 per share. So currently, with Altisource being at 9, I for sure think it's getting back to its pre-market valuations of 20. But once again, there's this pent-up demand. There's 8 million households facing foreclosure or eviction. The mortgage lenders are going to be ready on, I guess, August 1st to resume. So this company, their services are needed, and they're going to get back to doing business. Now, will it ever reach its stock price highs? No, I don't think so. I don't think it'll ever get up this crazy high again. But could it get back to potentially 90? There's actually some really good arguments for that. So what we're going to do is we're going to go on macrotrends.net, and I'll show you how to basically look at the details of their financials to see what is the story of this company right now. First thing let's look at is their revenue, and obviously their revenue has been declining. They actually peaked in 2014, and it's just been a downtrend. Once again, as the housing market was good, the economy was good, and they've not been doing well, obviously, since this pandemic. So here's the first quarter of 2020, right before the pandemic hit. Then it dropped down to 95 million, 89 million, 60 million, and 50 million. So they only did $50 million in revenue last quarter that they reported. If we go to net income, once again, they're not generating a profit currently. So here is where they were negative. So they were negative $306 million the fourth quarter of 2019, and they've just been basically unable to operate as normal. They have other services they do, like origination and titling or something, so they still are bringing in a little bit of income, but it's not enough to cover their not enough to cover everything they're doing. They're trying to sustain themselves and hold on to cash until, once again, the moratorium ends. But this is something that actually gets me really excited, and this is shares outstanding. Altisource, like a good company, the last 10 years had been aggressively buying back shares. So when I showed you their stock price peaking in fourth quarter of 2013, we can actually look at exactly how many shares outstanding there were in the fourth quarter of 2013. And there were 25 million shares outstanding, but they bought back a bunch of shares. And they're currently at, let's see here, they're currently at 16 million. What this means is that since 2013, they've decreased the number of shares in existence by 40%. So their stock valuation, based on the number of shares today, for their revenue and profitability in 2013 would have been much higher. If there's fewer shares in existence, your shares are more valuable. So based on the number of, like, if they got back to their profitability and revenue that they had in 2013, which they won't, but if they did and there's 40% fewer shares, the stock price would be easily close to 250. Once again, is it going to get back to those recession numbers from 2009, 10, 11, 12? No, I don't think so. But it definitely still has the potential to 10x based on the number of shares outstanding, based on the demand for their services that is coming once the moratorium officially ends. And I think other good news that I didn't mention is that if you go on their website, they put out a press release on June 23rd. Once again, a day before President Biden announced the moratorium ending, but it says Altisource signs revolving line of credit agreement. This company probably was in risk of going bankrupt. They were burning cash, and if they couldn't secure debt, if nobody wants to loan them money, then they're just done. However, Altisource, 2 days ago, let's see here, increased investor optimism can be attributed to Altisource recent credit agreement for a 3-year revolving line of credit with STS Mater Funds, which provides the former with the ability to borrow up to $20 million through June 22, $15 million through 22, and $10 million until the end of the term. So Altisource, which has been burning cash and hoping to stay alive, secured credit to get them through the rest of the year until they can return to profitability. So this is huge for the company that they don't have to issue new stock in order to remain solvent and keep going. If we click on price ratios, we're not going to get a lot of useful information because, once again, they don't earn a profit, so their P/E is currently 0. If we click on price to free cash flow, once again, their cash flow is 0 because they're losing money. If we click on price to sales, once again, not going to give you any useful information. This is not a fundamentals play, guys. So let's click on assets and liabilities, and I just want to show you their cash on hand. And once again, they've secured financing, but this is their cash on hand, and this is what they're burning. So this is 184 million, gone down to only 41 million. Now they've done a lot to cut costs to get them through this pandemic, but they're only down to $41 million. When we look at their long-term debt, we can see that it's currently $243 million. So this is a company that has $243 million in debt and only $41 million cash on hand. Not a good scenario. When we look at shareholder equity, what is the value of everything this company has and does versus how much debt they have? They have negative equity. This is really bad for a company, but once again, extraordinary circumstance. This is what they're going to have to immediately fix and work on once the moratorium ends, and we'll see if they can do it. So if you choose to buy this stock, there is huge upside potential in the 10x range. However, you got to be careful with small cap stocks, and the market cap of this company is only 144 million. The concern is, it looks like we're out of the woods with the pandemic, but if something unexpected happens and a moratorium is put back in place on foreclosures, how much longer can Altisource survive? They secured this line of credit, but this is a long-term buy and hold, guys. I definitely want to hold these 600 shares longer than a year, one, to get favorable long-term capital gains when I sell it, but this might take the company 1, 2, or even 3 years to play out. But once again, if you're patient and you're comfortable with the risk, because there is always risk with them not being in charge of their own destiny. It's a government moratorium, basically. So if you're okay with the risk, there's huge upside potential. I'm comfortable with investing 10% of my account on this one stock. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, once again, follow me on Instagram and Twitter. I'll put the links down in the description if you want up to the second information when I have it and I feel like sharing it, basically. If you have any comments or questions or you know something I don't about this company, let me know down below. I love hearing from you guys. Till the next video, take care.